Ladies and gentlemen, good day and welcome to the Gopal Snacks Limited Q3 and 9 months FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. We have with us today the senior management team of Gopal Snacks Limited, Mr. Raj Hadwani, Chief Executive Officer, and Mr. Mukesh Kumar Shah, Chief Financial Officer, who will represent the company on the call today. The management will be sharing the key operating and financial highlights for the quarter and 9 months ended December 31st, 2023, followed by a question and answer session. Please note that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Gopal Snacks Limited will not be in any way responsible for any actions taken based on such statements and undertakes no obligations to publicly update these forward-looking statements. Documents relating to the company's financial performance are available on the website of the stock exchange and the company's investor section. Trust you have been able to go through the same. I now hand the conference over to Mr. Raj Hadwani. Thank you, and over to you, sir.
My name is Raj Hadwani. Thank you for joining us on very first call after listing. We hope you all got a chance to go through our investor presentation uploaded on stock exchange. We will be sharing key operating and financial highlights for the quarter and 9 months ended December 31st, 2023. But before we begin with the quarterly updates, since this is our maiden call, some of you might be looking at the company for the first time. We would like to take this opportunity to brief you all about our business model. Gopal Snacks is a prominent snacks manufacturer based out of Rajkot, Gujarat, and one of the leading brands in the Indian savory snacks market, with presence across 3 key segments such as ethnic snacks, western snacks, and other products, which include papad, besan, spices, etc. While Mukesh will delve through each of the segment in a bit, I would like to share that over the years, Gopal Snacks has attained leadership position in some of the sub-segments. And today we are household name when it comes to gathia, snack pellets, ethnic namkeen, ethnic savories, and papad, mainly in Gujarat and many other parts of India as well. From a humble beginning to small-scale manufacturing and trading of namkeen products in the year of 1994, we have established a fully integrated business operations having in all manufacturing capacity of 404,729 metric per annum across 6 facilities, includes 3 ancillary units that manufactures the raw material or ingredients like besan, spices, raw pellets, etc. Next to primary facilities to ensure seamless movement of products and enhance operational efficiency. Well-diversified product portfolio of 85 products and 320 SKUs. A large in-house cold storage unit having capacity of 40,000 metric ton. Own fleet of 266 logistic vehicles and 2 depots for easy transportation of goods, and a vast, well-established pan-India distribution network of 638 distributors spread across 12 states and 1 union territory, which is digitally powered through installation of DMS, Distribution Management System, which improves efficiency. As a step forward green energy, we have installed a total 1.2 MW of solar power at our facility in Gujarat and additionally commissioned 2 megawatt wind power in Gujarat. Having built this kind of a vertically integrated business operation has helped us to achieve better quality, supply and cost control thereby leading to one of the industry best profit margins. Further, our in-house capabilities for manufacturing and fabrication of machinery required for snacks and namkeen helps in reducing overall capex per unit. Consequently, our fixed asset turnover ratio is almost 6.27x for 2023, is amongst the highest in the industry, and this is despite capacity utilization of below 40%. Our other key strength has been the success of rupees 5 SKU, which is sweet spot for the company. As it is easy to sell due to value for money proposition it offers, and we are able to sell profitably due to our backward integration. And it gives us upper hand in understanding regional preferences and changing customer demand, especially while entering a new market or a new segment. Of our total revenue, 9 months financial year 24, almost 70% comes from rupees 5 SKU. With these key success factors in place, we are confident of continuing our growth momentum on the back of increased depth and focus on larger pack, enhanced focus on Western category, particularly potato wafers and other new products. Accelerate expansion in focus markets such as Maharashtra, Rajasthan, Madhya Pradesh, Uttar Pradesh and other markets such as Jharkhand, Chhattisgarh, Bihar, Telangana and Karnataka, currently contributing almost 24% of total revenue. The support infrastructure is already in place with strategically located manufacturing units in proximity of this market and having 298 distributors in focus markets, having ample scope of growth. Continued focus on enhancing brand awareness and technology upgradation. I will now request Mr. Mukesh Kumar Shah to provide his thoughts on quarter as well as provide some update on financials. Thank you.
Yeah, thanks Rajbhai. Good afternoon everyone. Now I'll begin with sharing key financials numbers and operational highlights for the quarter and 9 months that ended on December 31st, 2023. So first let me begin with highlighting the performance of Q3 FY24 and year-on-year comparison of same with Q3 of FY23. So in FY24, in Q3 of FY24, we had reported a revenue from operations at rupees 368 crores, which is at a gross profit of 96 crores, and our EBITDA stand at 35 crores at a EBITDA margin of 10%. If you compare the same numbers in Q3 of FY23, we witnessed a revenue drop of 1% and EBITDA margin lower from 16% to 10%. The reason for lower EBITDA versus Q3 of FY23 being couple of reasons. In Q2 of FY24, we had increased the retailer margin on our 5 rupees SKUs on namkeen and gathia products from 50 paisa to 75 paisa, which has impact in our EBITDA to close to 13 crores for the quarter 3 of FY24. We had overhead cost had inflationary impact of rupees 10 crores and which also include increase in headcount of employee and higher spend on marketing and sales cost. Overall 10 crores higher overhead cost. During Q3 of FY24, we have witnessed a reduction in palm oil prices to the extent of 23% versus Q3 of previous year, and increase in chana prices almost 24% versus Q3 of previous year. The net benefit is positive, which we have passed on to the customer by way of grammage increase from 20 grammage to 25 grammage in couple of our SKUs, which overall there has been a reduction of 9.47 crores in our raw material prices in Q3 of FY24 versus Q3 of previous year, and we have passed on this benefit to our customers. Now I will highlight our 9 months performance and again the comparison with previous year 9 months performance. Revenue from operations for 9 months we reported at 1044 crore, 1044 CR at a gross profit margin of 29% and EBITDA margin of 12%. which is at 300 crores, gross profit of 300 crores and EBITDA of 130 crores respectively. Compared to 9 months of previous year, there was a drop in revenue by 2% and EBITDA margin dropped from 14% to 12%. However, gross profit margin remained at a similar level of 29%. Again, the reason for lower EBITDA in 9 months is due to following factors. There was an increase in overhead cost of 23 crore in 9 months, which are results of inflationary impact, increase in employee headcount, and higher advertisement and marketing spends. Further, during 9 months of FY24, we had witnessed a reduction in palm oil price of 27% versus 9 months of previous year, and increase in chana prices of 14% versus 9 months of previous year. The benefit of net reduction in overall raw material prices was passed on to the customers again in this FY24 by way of grammage increase from 20 grammage to 25 grammage in couple of our SKUs, and further increase in retailer margin from 50 paisa to 75 paisa. So whatever benefit we got in terms of reduction in raw material prices was passed on to the customer as well as our dealer in 9 months in FY24. Now I'll further deep dive into our state performance. We have identified core state as our Gujarat, and focus state includes Maharashtra, MP, Rajasthan and UP. Comparison of performance in core and focus state versus previous quarters as below. Our revenue contribution from core state in Q3 of FY24 was at 75% as against 80% of Q3 of previous year. We witnessed a growth of 13% in revenue year on year from focus state in Q3 and 9% for 9 months from previous year. Core state had slightly lower sale versus previous year in both the periods. Now I'll get into a segment-wise comparison. As Rajbhai mentioned, we have close to 84 products, which is more than 300 SKUs. Our major revenue comes from ethnic snacks, which is our backbone to our business, and ethnic snacks include gathia and namkeen. Overall revenue contribution from ethnic products is 54% in Q3 FY24 and 55% in 9 months FY24. Gathia, being our key participants of ethnic snacks, contributes 27% in Q3 FY24, and balance revenue comes from other ethnic snacks. We are the largest player in Indian gathia market, and we believe that this is just the beginning of a gathia beginning, as gathia accounts for 3% of the total organized Indian savory snacks market and is gaining popularity in other states as well. As we have started focusing on other states like UP, MP, Rajasthan and Maharashtra, we see a lot of traction coming of our gathia product from these states. Now, let me get further into our next category, which is Western snacks. Western snacks distinctly identified potato wafers as a key growth driver, bolstering a growth in terms of number of pouches sold also at 34.7%. So there has been a growth in number of pouches we have sold in Q3 FY24 versus Q3 FY23 of approximately 35%. And in 9 months, we have witnessed a growth in number of pouches to the extent of 28%. And as well in the focus market. Wafers is doing great, which is a vote of confidence for us, and we can satisfy the market's test buds. The third segment, which is the other segment, which includes other products like papad, besan, spices, etc. We are witnessing and seeing a lot of growth in this product as well, and these are because of our constant effort of all our team. Now getting into SKU wise comparison, we have products into 5 rupees SKU, 10 rupees SKU and bigger packs. 5 rupees SKU contributes 69% of our revenue, which was 75% in Q3 of last year. We have witnessed a growth in 10 rupees SKU at least by 43% in Q3 of FY24 versus Q3 of FY23. And similar growth we have witnessed in 9 months performance as well. And the major growth in 10 rupees SKU has come from wafers, besan and other products as well. In addition to our monthly performance, we just wanted to highlight couple of key points which we have witnessed in Q3 of this FY24. The one reason being our raw materials. These raw materials are commodity products. They are highly prone to seasonality and irregularity in crop cycles, which often result into higher costs. In Q3 of FY24, when we compare it with Q2 of FY24, we have witnessed chana prices have increased by 11% and urad price has increased by 14% versus Q2, which has been one of the major factor affecting gross profit margin of the company in Q3 of FY24. We believe in financial discipline, and the company has judiciously utilized cash towards lowering debt from 107 crores in March 23 to 26 crore as of September 23, and generated cash flow from operation of 122 crores in FY23, which allow us to reinvest this in newer market and products. So overall, we have repaid close to 75 crores of our borrowing in 6 months of the operation in FY24. Our capacity utilization from all the plants put together is below 40%, and we have already invested in future capex, and there is a potential to grow revenue by 2 times without any major capex. We have a healthy and the best in the industry returns ratios. Our ROC stands at 43%, our ROE stands at 39%, and asset turnover stands at 6.27 times, despite future capex already invested in the business. To this note, now I conclude our presentations. We thank you a lot for listening to us affirmatively, and now we open the session for questions and answers to all of you. Thank you very much.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, you may press star and 1 to ask a question. The first question is from the line of Sunil Kumar Pant from Planify Capital. Please go ahead.
Hello, good afternoon, sir. Am I audible?
Yes, sir. Please go ahead.
Okay. Thank you so much, sir, for giving this opportunity and taking up my question. So my question was on the margins front, like why the margins declined year on year and the operating profit margins as well as the profit margins. That's it, sir. Thank you.
So if we I'll take this question. So if we compare the performance of Q3 of FY24 versus Q3 of FY23, the margin has declined. As I said, the overall, if I have to give you the number, EBITDA has come down by roughly. So EBITDA has come down by, let's say, from EBITDA in Q3 of FY23, we registered EBITDA of 58 crores, whereas in Q3 of this year, we reported EBITDA of 35 crores. The major reason of reduction in EBITDA, as I said, there is an increase in overhead cost close to 9 crores, which is primarily coming from increase in employee cost, which has headcount increase as well as annual increment. And there has been an increase in the retailer margin from 50 paisa to 75 paisa on a couple of our 5 rupees SKU, which we have done in Q2 of FY24, which has impacted EBITDA to the close of 13 crores. In addition, we got a benefit of price reduction in raw material prices in our palm oil products and increase in chana price. The net benefit is positive, which was close to 10 crores, which we have passed on to the customer by way of a grammage increase from 20 grammage to 25 grammage. So the overall net increase is close to 23. The net EBITDA has come down by 23 crores, which is because of following reasons, which I explained.
Okay. All right, sir. Sir, just wanted to know, like, you mentioned that the impact on the margin was due to the increase in the employee cost. So going forward, would we see any kind of jump in the revenue because of the costs incurred in this quarter?
Yes, definitely. So during FY24, we have built our sales team. We have hired a sales professional from FMCG companies, which includes RSM, ASM, National Sales Head, where the cost has come in FY24. The benefit of the cost what we have incurred will definitely be there in coming years.
Right. Sir, the one last follow-up question on this. Would you like to give any guidance on that, the margins and the revenue growth?
So revenue growth, we don't give a forward-looking statement, but the only guidance what we can give is that industry, as per the industry report, the industry is going to grow at 10 to 11%. And based on our internal efforts and estimations, we are targeting more better growth than the industry.
Right, sir. Thank you so much, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Krish Jamnani from Krish Investments. Please go ahead.
Good afternoon, sir. My question is whether we are in the business of cone-based snacks like Kurkure or like that. If yes, then how much that percentage in revenue?
Yes, we are in that business, but yes, no, the extruded Kurkure type, right?
Yeah.
Kurkure type we have, but very small numbers.
So it is a very negligible number. It is part of our Western Snacks kitty. Our quarterly sales is close to 4 to 5 crores.
Okay. Are you planning to increase that share?
Yeah, we'll have a growth in this segment also.
Okay, thank you, sir.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Pradeep Dubaria from Yellow Water Securities. Please go ahead.
So, yeah, my question is regarding the export of products. So, is the company looking forward to export the products to the countries where Indians are more, like UK or Canada?
So as of now, we are exporting our products, and revenue is small as we haven't focused yet. So in upcoming years, yes, we will be focusing on exports as well, and we'll build team as well for exports. As of now, we have exports around, I can say, like 1%, less than 1% of our contribution.
Okay, fine. Thank you.
Thank you. The next question is from the line of Rahil Shah from Crown Capital. Please go ahead.
Yes, hi, I'm audible.
Sir, may I request you to use your handset, sir? Your voice is slightly muffled, sir.
Just a moment.
Is it better now?
Yes, sir. Thank you very much.
Yeah. Hi. So firstly, to the management, now if you could highlight a few key steps and strategies that you are undertaking as of now for FY25 for the kind of growth you are mentioning that you want to grow better than industry. So what are the key steps and strategies that you are now undertaking to meet that kind of a growth?
So thanks for the question. So we have divided our market into 3 segments, into 3 markets, I'll say. For core state, focus state, and other markets. So core state being our Gujarat, we have a different strategy. Focus state is Maharashtra, MP, Rajasthan, and UP, where we have a different strategy. In other market, we will be entering into those markets. So for core market, Gujarat, where currently 70% of our revenue comes from Gujarat, we have identified and did an internal survey where we see 20 to 25% area still not penetrated, where we have identified locations and we are in process of appointing dealer. We'll focus more on depth of the market. We have close to 3+ lakhs retail touch point where we are serving in Gujarat, and there are still 15 to 20% retail touchpoint vacant, where we'll place our products. As you know, we have a product range close to 84 products. So we are working on how we make our product penetrated in each and every retail outlet so that the revenue from the existing retailer increases by 20-25%. So that's the strategy on core market. Focus market is something where we are 10 to 15% penetrated. There are a lot of vacant area where we will work on appointment of new distribution, the entire network of channels, etc. Plus, since we have a product portfolio, wide range of product portfolio, and we have couple of hero products which allow us to get entry into any market, we will explore those products and make entry into those markets. So that's the approach we are following for our sales increase. And in addition, we have also appointed an agency, Scarecrow, who's a creative agency, a national level agencies. They will help us in designing our company strategy in terms of communications to customers and wide market. So we are also focusing on making our regional brand a national brand by branding, etc. Rajbhai, you want to add anything on this?
Yes, so we are also participating lots of exhibitions for B2B segments, and which help us to develop into our newer states. So there are a few exhibitions held in Ahmedabad, Mumbai, and Delhi, where we get requirements like all the distributors comes there who want to do distribution in newer products, which help us to build new distribution channel. So these are the few things we were working on.
So this exhibitions, the marketing via the exhibitions to improve the distribution channel, is it ongoing or you have completed and will see effects in this year, or will it be will you be doing it now and cost will be added?
No, in last year we have participated in few, and this year also will participate in few, and it is ongoing process. It's not like one time thing. It's a branding and branding activity as well as getting new distributor activity.
Mm-hmm. Okay. And secondly, then coming back to the EBITDA margins. So it's you mentioned the reasons why they dropped this quarter. But now, since you're expecting to grow better than industry in the next coming year, and you have taken these steps about focusing in areas where there's a lot of room to grow, can we expect margins to come back as well? Will we see gradual improvement in margins, or how will it happen?
So if you see, as I said, we have already invested in future capex, and we have invested in overheads also, and our capacity utilization is less than 40%. So definitely with the increase in sales, we will optimize on overhead cost, which we have already incurred. But good chunk of amount we will be investing into our sales and marketing costs. So we cannot assure you that we'll be maintaining an EBITDA margin of 13%, but there will be some additional cost coming on account of branding and sales cost in the coming year. And 70% of our cost is raw material cost, which is a commodity-driven cost, which we do not have control on those costs. So with the increase or decrease in the raw material prices, definitely there will be an impact in the margin as well.
But that's just near term, right? So let's say over the longer term, like by the end of the year, do you expect to reach those good mid-teen margins again, or you're uncertain about that as well?
No, so margin plus minus 2% will be the range of our reporting.
Okay, I'll get back in. Thank you so much.
Yeah, thanks.
Thank you. The next question is from the line of Riddhi Baid from O3 Capital. Please go ahead.
Hi, everyone. My question to the management is, what can you give a guidance on the advertisement cost going forward? Because I believe in the industry, the advertisement cost has been on the lower range. So what is the management guidance on the advertisement expenses going forward?
We are not